Assalamualaikum. We are from Group 2 DIA6 want to present about assignment financial management. I am SYARIFAH NAJIHAH binti OMAR and my other group members are MOHAMMED FIRDAUS bin ZULKIFLI, NURUL Izzah binti Zamri, ANISSA binti AHMAD SAIPUDIN and AQILAH binti RAZALI. Based on our discussion, we agreed to choose plantation sector as our assignment for financial management subject. The name of company that our group chose include TDM Berhad and First Resources Limited. TDM Berhad is an investment holding company. TDM Group involved in the palm oil plantation and healthcare. The group's plantation division is involved in the development and management of palm oil plantations and in the processing of crude palm oil and palm kernel, while First Resources Limited Company has been established in 1992 and listed on the Singapore Exchange since 2007. Based on First Resources Limited website, First Resources Limited Company is one of the leading palm oil producers in the region.
Assalamualaikum, my name is Mohammed FIRDAUS bin ZULKIFLI. I will start explaining for the year 2014. The graph of liquidity ratios between two companies. This bar chart from two companies which are TDM Berhad and First Resources Limited shows three types of ratio for liquidity. The ratios are current ratio, quick ratio and cash ratio. In 2014, the current ratio for First Resources Limited is 538%, while for the TDM Berhad, the current ratio is 122%. Other than that, the quick ratio for TDM Berhad is 92%, while for the First Resources Limited is 527%. Besides that, the cash ratio for TDM Berhad is 23%, while for First Resources Limited is 330%. The next one is graph of solvency ratios between two companies. This bar chart from two companies which are TDM Berhad and First Resources Limited shows two types of ratio for solvency. The ratios are debt to assets ratio and debt to equity ratio. In 2014, the debt to assets ratio for First Resources Limited is 44%, while for the TDM Berhad, the debt to assets ratio is 36%. Other than that, the debt to equity ratio for TDM Berhad is 79%. While for First Resources Limited is 57%. The third one is graph of profitability ratios between two companies. This bar chart from two companies which are TDM Berhad and First Resources Limited shows three types of ratio for profitability. The ratios are gross profit margin, operating profit margin, and net profit margin. In 2014, the gross profit margin for First Resources Limited is 53%, while for the TDM Berhad, the gross profit margin is 44%. Other than that, the operating profit margin for TDM Berhad is 18%, while for the First Resources Limited is 44%. Besides that, the net profit margin for TDM Berhad is 14%, while for the First Resources Limited is 29%. Graph of efficiency ratios between two companies. This bar chart from two companies which are TDM Berhad and First Resources Limited shows two types of ratios for efficiency. The ratios are return on assets and return on equity. In 2014, the return on assets for First Resources Limited is 9%, while for TDM Berhad, the return on asset is 3%. Other than that, the return on equity for TDM Berhad is 4%, while for the First Resources Limited is 4%. Graph of valuation ratios between two companies. This bar chart from two companies, which are TDM Berhad and First Resources Limited, shows valuation ratio. The ratio is price to earnings ratio. In 2014, the price to earnings ratio for First Resources Limited is 2.3, while for the TDM Berhad, the price to earnings ratio is 5.2.
Hello and Assalamualaikum. My name is ANISSA. So I will present the ratios for the year 2015. This graph shows three types of liquidity ratio, which are current ratio, quick ratio, and cash ratio of two companies, TDM Berhad and First Resource Limited for the year 2015. In this year, the current ratio for TDM Berhad is 118%, and for First Resource Limited is 394%. For the quick ratio, TDM Berhad is 97% and First Resource Limited is 320%. And for the cash ratio, TDM Berhad is 34% and for First Limited Resource is 68%. For the next graph, show two types of solvency ratio, which are debt to assets ratio and debt to equity ratio for two companies, which is TDM and First Resource Limited for the year 2015. For the debt to asset ratio, TDM Berhad is 44% and for First Resource Limited is 46%. For the debt to equity ratio, TDM Berhad is 78% and for First Resource Limited is 84%. For the next slide is the graph regarding three profitability ratio, which are gross profit margin, operating profit margin, and net profit margin for two companies, TDM Berhad and First Resource Limited for the year 2015. For gross profit margin, TDM Berhad is 37% and for First Resource Limited is 55%. And for the operating margin, TDM Berhad is 20% and for First Resource Limited is 41%. And for the net profit margin, TDM Berhad is 18% and for the First Resource Limited is 25%. Here is the graph show two efficiency ratio, which are return on asset and return on equity for two companies, TDM Berhad and First Resource Limited for the year 2015. For return on asset, TDM Berhad is 3% and for First Resource Limited is 6%. For return on equity, TDM Berhad is 5% and for the First Resource Limited is 11%. This graph show a market ratio, which is price per earning ratio for two companies, TDM Berhad and First Resource Limited for the year 2015. For price earning ratio, TDM Berhad is 3.7 and for the First Resource Limited is 3.67.
Assalamualaikum. I'm NAJIHAH binti SYED OMAR, matric number 048496. Want to present for my part in this assignment. So the bar chart shows three types of liquidity ratios, which are current ratio, quick ratio, and cash ratio for two companies, TDM Berhad and First Resources Limited in 2016. For TDM Berhad Company, the current ratio result indicates that for every 1 ringgit of current liabilities that TDM Berhad has at this present point in time, it has 1 ringgit and 16 cent worth of current assets. Additionally, for quick ratio, every 1 ringgit of current liabilities, it has 98 cent worth of current assets less inventories. As you can see, the cash ratio of TDM Berhad is 0.38. This means that TDM Berhad only has enough cash and cash equivalents to pay off 38% of current liabilities. For First Resources Limited Company, the current ratio result indicates that for every $1 of current liabilities that First Resources Limited has at this present point in time, it has $1.08 worth of current assets. Additionally, for quick ratio, every $1 of current liabilities, it has $0.89 worth of current asset less inventories. The cash ratio of First Resources Limited is 0.27. This means that First Resources Limited only has enough cash and cash equivalents to pay off 27% of current liabilities. Next, the bar chart shows 3 types of solvency ratios, which are debt to asset ratio, debt to equity ratio, and financial leverage ratio for 2 companies, TDM Berhad and First Resources Limited in 2016. For TDM Berhad Company, the debt to asset ratio indicates company has 49 cent total assets for every 1 ringgit of total liabilities. Additionally, for debt to equity ratio also indicates company has 95 cent total equity for every 1 ringgit of total liabilities. It means creditor provide 95 cents for each ringgit provided by equity to finance the asset. Next is the financial leverage ratio indicates has 1 ringgit and 95 cent equity for every 1 ringgit of total assets. For First Resources Limited Company, the debt to assets ratio indicates company has $0.45 total asset for every $1 of total liabilities. Additionally, for debt to equity ratio also indicates company has $0.84 total equity for every $1 of total liabilities. It means creditor provide 84 cents for each dollar provided by equity to finance the assets. Next is the financial leverage ratio indicates has $1.84 equity for every $1 of total assets. Apart from that, the bar chart shows 3 types of profitability ratios, which are gross profit margin, operating profit margin, and net profit margin within 2 companies, TDM Berhad and First Resources Limited in 2016. For TDM Berhad Company, the gross profit margin result indicates that for every 1 ringgit of revenue earned by the firm, it has earned 13 cents of gross profits to cover its operating expenses after providing for its cost of sales. In short, the firm able to generate 13 cents of gross profits for every 1 ringgit of revenue made by the firm. Additionally, operating profit margin shows for every 1 ringgit of revenue earned by the firm, the revenue is enough to cover up to 87 cents of the firm's total operating expenses. The net profit margin may be interpreted that for every 1 ringgit of revenue that TDM Berhad earns, it earns a net profit of 4 cents. For First Resources Limited Company, the gross profit margin result indicates that for every $1 of revenue earned by the firm, it has earned $0.46 of gross profits to cover its operating expenses after providing for its cost of sales. In short, the firm able to generate $0.46 of gross profits for every $1 of revenue made by the firm. Additionally, operating profit margin shows for every $1 of revenue earned by the firm, the revenue is enough to cover up to $0.64 of the firm's total operating expenses. Apart from that, the net profit margin may be interpreted that for every $1 of revenue that First Resources Limited Company earns, it earns a net profit of $0.23. Next, the bar chart shows 2 types of efficiency ratios, which are return on equity ratio and return on asset ratio within 2 companies, TDM Berhad and First Resources Limited in 2016. For TDM Berhad Company, the return on equity results indicates that for every RM1 of equity that is made available to the firm, the management of TDM Berhad is able to generate return of after tax of 0.013 cent. Additionally, the return on asset indicates that for every RM1 of assets that is made available to the firm, the management of TDM Berhad is able to generate a return of tax of 67 cents. Apart from that, the inventory turnover shows the inventories produced or purchased and sold by TDM Berhad need to be replenished six times per year. For First Resources Limited Company, the return on equity results indicates that for every $1 of equity that is made available to the firm or that the firm invests in, the management of First Resources Limited Company is able to generate return after tax of $0.014. Additionally, the return on assets indicates that for every $1 of assets that is made available to the firm, the management of First Resources Limited is able to generate a return of tax of $0.08. Apart from that, the inventory turnover shows the inventories produced or purchased and sold by First Resources Limited Company need to be replenished 4 times per year. Next, the bar chart shows one types of market ratios, which is price per earning ratio for two companies, TDM Berhad and First Resources Limited, in 2016. The price per earning ratio for TDM Berhad is 15 times, while for First Resources Limited is 3 times. This means that TDM Berhad's share currently sell for 15 times of its earning, while for First Resources Limited's shares currently sell for 3 times of its earnings. The information shows price per earning ratio for TDM Berhad is higher than First Resources Limited.
My name is AQILAH binti RAZALI. I will present the comparison between TDM Berhad and First Resources Limited in 2017. The first graph is liquidity ratio in 2017. The bar chart shows 3 types of liquidity ratios, which are current ratio, quick ratio, and cash ratio for two companies. In 2017, the current ratio for TDM Berhad is 103%, while for First Resources Limited is 401%. Apart from that, the quick ratio for TDM Berhad is 88%, while for First Resources Limited is 339%. Furthermore, the cash ratio for TDM Berhad is 26%, while for First Resources Limited is 280%. For TDM Berhad Company, the current ratio indicates company has 103% more favorable easily to make current debt payments. So, a current ratio of 103% times would mean that the company has 103% more current asset than current liabilities. Additionally, for quick ratio also indicate company has 88% most readily available current asset to pay off short-term obligation. Next is cash ratio indicate has 26%. It means that more liquid assets are available to pay current liabilities when they become due or add-ons. For First Resources Limited Company, the current ratio indicates company has 401% more favorable easily to make current debt payment. So, a current ratio of 401% would mean that the company has 401% more current asset than current liabilities. Additionally, for quick ratio also indicate company has 339% ability to pay off with quick asset without having to sell off any long-term or capital asset. Net is cash ratio indicate has 218% highly liquid and easily to fund its debt. Next graph is solvency ratio in 2017. The bar chart shows two types of solvency ratios, which are debt to asset ratio and debt to equity ratio for two companies. In 2017, the debt to asset ratio for TADM Berhad is 47%, while for First Resources Limited is 41%. Apart from that, the debt to equity ratio for TADM Berhad is 87%, while for First Resources Limited is 69%. For TADM Berhad Company, the debt to asset ratio indicates company has 47 cent total asset for every 1 ringgit of total liabilities. Additionally, for debt to equity ratio also indicates company has 87 cent total equity for every 1 ringgit of total liabilities. It means creditor provide 87 cent for each ringgit provided by equity to finance the assets. The next graph is profitability ratio in 2017. The bar chart shows three types of profitability ratio, which are gross profit margin, operating profit margin, and net profit margin for two companies. In 2017, the gross profit margin for TADM Berhad is 46%, while for First Resources Limited is 47%. Apart from that, the operating profit margin for TADM Berhad is 17%, while for First Resources Limited is 35%. Furthermore, the net profit margin for TADM Berhad is 4%, while for First Resources Limited is 22%. For TADM Berhad Company, the gross profit margin indicate has 46% for every ringgit of revenue the company is earning. Additionally, the operating profit margin also indicate has 17%, means that a net profit of 0.17 is made on each ringgit of sales. Next is the net profit margin indicate has 4 ringgit net income per 100 ringgit of revenue. For First Resources Limited Company, the gross profit margin indicate has 47% for every dollar of revenue the company is earning. Additionally, the operating profit margin also indicate has 35%, mean it a net profit of 0.35 is made on each dollar of sales. Next is the net profit margin indicate has $22 net income per $100 of revenue. Next is efficiency ratio graph in 2017. The bar chart shows two types of efficiency ratio, which are return on asset and return on equity for two companies, TADM Berhad and First Resources Limited. In 2017, the return on asset for TADM Berhad is 4%, while for First Resources Limited is 8%. Apart from that, the return on equity for TADM Berhad is 3%, while for First Resources Limited is 22%. For TADM Berhad Company, the return asset indicates had 4%. It means TADM Berhad invested in assets during the year produced 0.04 cent of net income. Additionally, the return on equity indicates has 3% from the investor's investment in the company. For First Resources Limited Company, the return on asset indicate has 8%. It means First Resources Limited invested in asset during the year produced 0.08 cent of net income. Additionally, the return on equity indicate has 22% from the investor's investment in the company. Last graph is market ratio in 2017. The bar chart shows the market ratios, which is price earning ratio for two companies, TADM Berhad and First Resources Limited. In 2017, the price earning ratio for TADM Berhad is 13.7 while for First Resources Limited is 2.9. For TADM Berhad Company, the price earning ratio indicate has 13.7, which the share is undervalued and should be purchased. However, for First Resources Limited Company, indicate has 2.9, which the share is overvalued and should be sold. This could prove to be a poor investment and need an improvement.
Okay, Assalamualaikum. I am NURUL Izzah. So now I will continue with comparison of TADM Berhad and First Resources Limited for 2018. Okay. The bar chart shows three types of liquidity ratios: current ratio, quick ratio, and cash ratio for two companies. In 2018, the current ratio for TADM Berhad is 104%, while First Resources Limited is 287%. Apart from that, the quick ratio for TADM Berhad is 57%, while First Resources Limited is 202%. Furthermore, the cash ratio for TADM Berhad is 19%, while First Resources Limited is 48%. For TADM Berhad Company, the current ratio result indicates that every RM1 of current liabilities that TADM Berhad has at this present point in time, it has RM1.04 worth of current assets. Additionally, for quick ratio, every RM1 of current liabilities, it has 57 cents worth of current asset less inventories. As you can see, the cash ratio of TADM Berhad is 19%. This means that TADM Berhad only has enough cash and cash equivalents to pay off 19% of current liabilities. Next is solvency ratio. The bar chart shows two types of solvency ratios, which are debt to asset and debt to equity. In 2018, the debt to assets ratio for TADM Berhad is 52%, while for First Resources Limited is 37%. Apart from that, the debt to equity ratio for TADM Berhad is 108%, while for First Resources Limited is 59%. For TADM Berhad Company, the debt to asset ratio indicates company has 52 cents total assets for every RM1 of total liabilities. Additionally, for debt to equity ratio also indicates company has RM1.08 total equity for every RM1 of total liabilities. It means creditor provide 108 cents for each ringgit provides by equity to finance the assets. For First Resources Limited Company, the debt to asset ratio indicates company has 37 cents total asset for every $1 of total liabilities. Additionally, for debt to equity ratio also indicates company has 59 cents total equity for every $1 of total liabilities. It means creditors provide 84 cents for each dollar provided by equity to finance the assets. Profitability ratios. The bar chart shows three types of profitability ratios, which are gross profit margin, operating profit margin, and net profit margin within two companies. For TADM Berhad Company, the gross profit margin result indicates that for every RM1 of revenue earned by the firm, it has earned 29 cents of gross profits to cover its operating expenses after providing for its cost of sales. In short, the firm generates 19 cents of operating loss for every RM1 of revenue made by the firm. Apart from that, the net profit margin may be interpreted that for every RM1 of revenue that TADM Berhad earns, it earns a net loss of 10%. For First Resources Limited Company, the gross profit margin result indicates that for every $1 of revenue earned by the firm, it has earned 44 cents of gross profits to cover its operating expenses after providing for its cost of sales. In short, the firm able to generate 30 cents of gross profits for every RM1 of revenue made by the firm. Additionally,
Operating profit margin shows for every $1 of revenue earned by the firm, the revenue is enough to cover up to 70 cents of the firm's total operating expenses. Apart from that, the net margin may be interpreted that for every $1 of revenue that First Resources Limited earns, it earns a net profit of 20 cents. Next is efficiency ratios. The bar chart shows two types of efficiency ratios, which are return on equity ratio and return on assets ratio within two companies, TDM Berhad and First Resources Limited. In 2018, the return on equity ratio for TDM Berhad is -4%, while for First Resources Limited is 13%. Apart from that, the return on asset ratio for TDM Berhad is -2%, while for First Resources Limited is 8%. For TDM Berhad Company, the return on equity results indicates that for every RM1 of equity that is made available to the firm or that the firm invests in, the management of TDM Berhad is able to generate return after tax of -4 cents. Additionally, the return on assets indicates that for every RM1 of assets that is made available to the firm, the management of TDM Berhad is able to generate a return of tax of -2 cents. This must be matched against the result of other firms for one to conclude the efficiency of the management of the firm. For First Resources Limited Company, the return on equity results indicates that for every $1 of equity that is made available to the firm or that the firm invests in, the management of First Resources Limited is able to generate return after tax of 13 cents. Additionally, the return on assets indicates that for every $1 of assets that is made available to the firm, the management of First Resources Limited is able to generate a return of tax of 8 cents. This must be matched against the results of other firms for one to conclude the efficiency of the management of the firm. Last but not least, market ratio. The bar chart shows one type of market ratios, which is price per earnings ratio for two companies, TDM Berhad and First Resources Limited. In 2018, the price per earnings ratio for TDM Berhad is -4.7 times, while for First Resources Limited is 3.3 times. This means TDM Berhad shares currently sell for -4.7 times of its earnings, while for First Resources Limited, shares currently sell for 3.3 times of its earnings. The information show price per earnings ratio for First Resources Limited is higher than TDM Berhad.
In conclusion, we can conclude that analysis of the financial statement is an important tool in assessing companies' performance. The ratios reveal the strength and weakness of these companies. There are various ratios that have been identified in determining a financial situation, can be categorized such as liquidity ratios, solvency ratios, profitability ratios, efficiency ratios, and valuation ratios. These ratios play a specific function with reference to the functionality and the status quo of an organization.